Section 1. Getting Organized and Getting Started. Part 1. Developing Your Financial Blueprint.
America has become a nation of financial victims. Those who fall prey to fast-talking and sometimes even well-meaning salespeople who often turn your financial decisions into financial waste. Every family makes 2 or 3 major money management decisions every single month. Because of a lack of training, these decisions often turn out to be financial errors. Guessing at financial decisions or listening to bankers, brokers, automobile or insurance salesmen will cause you to throw away an easy $1,000 a month. Knowledge is your first line of defense. For every financial decision, there is an optimum strategy, the right strategy. I've compiled all of these important strategies into your Money Strategies library with your tapes and your manual. Making decisions with optimum money strategies will keep your money where it belongs, in your pocket, saving you or making you thousands of dollars every year. As a Givens Organization member, we will help you turn financial waste into spendable profits. Double the purchasing power of your money. Create a financial plan that gives you total control over your financial future. Cut your income tax liability in half. Put together a $1 million retirement plan and double the profits from your investment plan. We'll turn you into a self-confident, competent money manager. These objectives you will accomplish using the tools in your membership. First, the Charles J. Givens Money Strategies Library. Second, your applications workshops. Third, your monthly Financial Digest newsletter. And fourth, your Money Strategies telephone hotline. All of these financial tools have been designed to simplify your life and make your wealth building plan easy to implement. In addition, your membership provides you with lots of money-making, money-saving services. We'll help you find the lowest possible rates when you buy a car. We'll always tell you where you can get the lowest rate on MasterCard and Visa. We've created the Life Insurance Clearinghouse for you, which will find you the lowest possible rates on life insurance, and through our affiliate company, Delta First Financial, we'll help you one-on-one with investment planning. You can have your own personal, registered and licensed financial planner, and even a Delta Advantage account, where we'll do the work of moving your mutual fund for you. If you have poor credit, we'll help you by steering you to MasterCards and Visas called Secure Cards that will help you overcome credit problems. Through your hotline, you can get credit counseling. And we have Delta groups in many areas for members who would like to meet monthly for continuing education. As far as a business opportunity, we have one at the organization as well called Share the Wealth. And if you need a credit reference and you've used the payment plan, we'll even give you the credit reference. In the future, the Givens Organization is going to help you by having a national hospitalization insurance plan for our members, a national automobile insurance program, and you'll be able to apply for home mortgages easily and conveniently through the Givens Organization. Stop the tape for a few minutes, open your reference manual, and read the specific instructions for using each of your important membership tools. Money won't buy emotional happiness, but it certainly will buy financial happiness. It's my experience that with a carefully laid out plan and the commitment to following it, anyone or any family can both build a beautiful lifestyle in the present without sacrificing the future, and build a financially sound future without sacrificing the present. How? By making every dollar count. By spending, not saving your way to financial success. The concept is simple. All the money you earn, except what resides in the cookie jar, is eventually spent. You can only spend money in 2 ways. Spending for your lifestyle, number 1. That means buying goods, services, and entertainment. Number 2, you can buy investments. That means spending for your future. But what if you had the knowledge to save so much money when buying goods and services, you would have all the money it would ever take for investing in a sound and happy financial future? No saving, no sacrificing. For instance, let's say that you're spending $900 every year on your automobile insurance. and you suddenly acquire the knowledge to cut your premiums to $450 without sacrificing the quality and quantity of your insurance. Your $900 would then buy you, first, your automobile insurance, second, a $450 per year investment. In addition to buying your insurance, over the 10 years, you have an additional $4,500 to invest, which invested correctly will grow to $9,500. That's almost $1,000 a year of free money produced by a plan that saves you only $400 a year. As a Givens Organization member, you have at your fingertips over 300 strategies, all of which have the same impact as the example that I just discussed. You can have the lifestyle you want and $1 million waiting for you at retirement, all accomplished by how you spend your money now. The next 20 years are going to happen to you anyway. How they happen to you financially is based totally on what you know and what you do, or by default, what you don't know and therefore can't do. It's not how long you live that counts, it's how much you live. Let's talk about how you can become a financial magnet. There are those who seem to attract money and those who can't seem to hang on to a dime. The difference is a function of the mind and not a function of income or assets. With knowledge, attitude, and control, you can become a magnet for financial opportunity instead of a victim of continual financial crises. Some even think they have a financial cloud or curse hanging over their heads. Just when the light appears at the end of the tunnel, that's when the car breaks down, there's an unexpected medical bill, the credit card bill is twice what's expected, or the bank balance was $200 short of what showed in the check register. These are common symptoms of financial ignorance, the inability to control and create financial progress. Think of two bar magnets. Remember way back in science class when we were taught opposite poles attract and like poles repel? Put one south pole and one north pole of the two magnets near each other, and they will be attracted with instant and surprising force. Put the two north or the two south poles together, and they will repel each other with the same force. That is exactly how the mind and financial opportunity work together, or all too often work against each other. With money, there is a set of principles that will work all the time and work for everybody. And those principles we're going to call our money strategies. The same principles that to the financially successful are completely logical are often illogical to the financially illiterate. That's what makes getting out of the financial rut seem so difficult. The approach is always an attempt to do more of what doesn't work. Success is never accomplished through doing more of what doesn't work, but only through using strategies that do work. Financial success is easy if you can just get someone to tell you the rules of the game. One of the easiest things I ever accomplished was becoming a millionaire. That didn't take long. The hardest job was figuring out how to do it. That took me over 20 years. You've got something I never had, an entire organization to help you learn and apply the elusive rules of wealth building. That is what the Givens Organization is all about. There are only two other possible alternatives. Continue doing exactly what you're already doing, working harder and trying harder. That approach will create plenty of frustration, but not wealth. Doing more of what doesn't work won't make it work any better, no matter how good your intentions, no matter how hard you try. By following the guidelines you're about to learn, you will become unstoppable financially, a real pro at making and managing your money. And because of this knowledge, you can build your wealth without risk. The two most important words in wealth building are planning and control. Did you ever wonder why some people become super achievers while others just falter and sputter with only talk of what they want to accomplish? The difference is not talent, it's not a college education, rich parents, or even built-in motivation. The difference between those who accomplish their dreams and those who only dream of accomplishing is planning and control. There are laws of cause and effect when it comes to reaching your objectives, which makes success a science and not an accident. Anyone who chooses to follow the rules or strategies for accomplishment will be met with a rich, rewarding, satisfying life. Those who are controlled by life, instead of controlling their lives, usually end up frustrated, angry, and cynical. Taking control means first identifying and accepting where you are, and then creating a dynamic plan to take you where you want to go in the minimum time with the maximum satisfaction. Personal or financial success, therefore, begins not with strategies, but with a definition of your objectives. Goals to bring satisfaction must be in alignment with your values. And in this section, you will work on identifying your predominant values and choosing your important goals. There are 4 important parts to your plan: your dreams list, your values list, your goals list, and your strategies list. Together, they become your blueprint for a rich, rewarding journey. Money strategies mean little unless they are part of a greater plan. Strategies are only tools, not ends in themselves. Your dreams are your destination, and your goals are the signpost of accomplishment that define your path. How important are goals? Harvard Business School did a study of its graduates over a 10-year period. Amazingly enough, they found that 83% had no goals whatsoever. 14% had goals, but they weren't written. Only 3% of Harvard Business School graduates had a written plan. Those 3% were earning 10 times the money on the average of the other 83%. But remember, your income does not determine your outcome. The amount of money that will pass through your hands over a working lifetime is incredible. For example, if you work 40 years and only earn an average of $25,000 a year, you will have made $1 million. If you get an annual raise of only 5%, the million explodes to $3 million. And there's no question or not whether you can make $1 million. The real question is, how quickly can you make your first million, and how much of it can you keep? What would you do if you did have more money? A typical family conversation might go like this.
Brad, if we could only get some extra money, there is so much we could do. We could send the kids to college, pay off the mortgage.
You know, you've got no imagination at all, Brenda. If we had any extra money, I think we'd probably take a trip to Europe or buy a new Cadillac.
Well, if you want to think like that, I could imagine myself in a new Mercedes.
Yeah, you're thinking.
This couple is dreaming, but certainly not planning. And planning is the connective link between dreams and accomplishment. An even more typical conversation goes like this.
Honey, you all set to go?
Oh, yeah. Do you have money for the babysitter?
I think so. Let me see. No, I'm afraid not. I got $5. And, you know, I started this morning with $100 in my wallet.
$100.
Mhm.
Where did it all go?
$20 on gas, $35 at the grocery store, $25 for that dry cleaning you dropped off yesterday, and then $15 at the drugstore. That's $95. I got $5 left.
That's unbelievable. What's worse, our visa came today. Look at this.
Oh, $817 this month. You know, what are we going to do?
These folks are out of control. Right now, their dream is limited to having some money left over at the end of the month after all of their bills are paid. Or how about this couple?
Bert, we've got to be more conservative. We can't afford to lose another dollar. Ever since we retired, costs have gone up and up. But our income is the same.
I know. We should never listen to that broker. He put us into commodities. Now we have less money than we've ever had, and our taxes are eating us alive.
This couple is scared. They seem to be caught in the retirement trap, the chance that they will be around longer than their money. They've stopped dreaming, and they've started worrying. All of these scenarios are caused by the same factors: lack of direction, lack of knowledge, and lack of financial control. Developing a financial blueprint is the answer for all financial situations. Your blueprint puts you back in control. All parts of your financial blueprint affect each other, and when aligned correctly, give you practically unlimited power to accomplish. Before learning and using strategies, it is a must to first make a dreams list, then identify your values, finally choose your goals, and then apply the strategies I will teach you. You will find yourself easily motivated to put these strategies to work.
Strategy 1-1. Create your dreams list.
Choose a totally quiet spot where you won't be interrupted. At the top of a pad of paper, write the following. If I had unlimited time, talent, money, and support from my family, here's everything I'd like to do in my life. Relax and let the ideas pour from both your conscious and subconscious minds. Don't evaluate your potential for achieving each item you write. Remember, this is just a dreams list. What you will write will excite you, motivate you, inspire you, sometimes make you laugh, but most of all, define desires and dreams that all too often are ready to surface but are held back by the complexities of daily living. Write it all down, no matter how silly it seems, no matter what it costs. The ideas will come slowly at first, gaining speed as you leave behind the realities and limits in your life. Stop the tape here and make a list of 15 of your dreams. You, of course, can add more to the list if you want. You'll find in your reference manual a dreams list form for you to use and one for your spouse to use if you have a spouse. I created my first dreams list quite accidentally right after I got out of high school. I went to work for a little grocery store bagging groceries. And I was a very shy kid. I didn't talk very much, but I dreamed a lot. And one day I sat down and did the exercise that I'm telling you about right now. And I will promise you it's one of the most important things I've ever done in my life. My first list was 181 dreams long, of which 170 have already become reality. Since that time, I've added hundreds of others, as you will probably find yourself doing. All of us, at any age, have dreams, and the first step to turn those dreams into reality is to get those dreams out in front of you where you can see and feel them. Having taught my students this dreams list strategy for over 12 years now, I've seen people do some truly wonderful things that they may never have done had they not created that dreams list. Ideas and beliefs about the relative worth of things in your life are called values. If you value security highly, choosing to leave your job and start your own business would be unlikely, or could cause a great deal of stress, unless, of course, you changed your values. On the other hand, if you value wealth above security, staying in a safe, secure job at an average wage would be a frustrating experience. You would constantly be looking for opportunity. If, on the other hand, you value security and wealth equally, you would experience the frustration of values conflict. The feeling that any decision might be the wrong one and making no decision at all might be even worse. The emotions and frustration are all mental and have nothing to do with what is the right or wrong decision. In the next exercise, you will create your own values list, making a list of your major values in order of importance. Values are programs in the mind and can be changed only with constant prodding, attention, and affirmation. In other words, to change your values, even if it is in your best interest, you must reprogram what's in your mind. It is far easier, though not always as rewarding, to change your actions, to get rid of the conflicts and live your life in accordance with what you already value most. Surprisingly, there are only a total of about 20 different values in life, and these values in different combinations result in the differences in people's actions. The differences in the wants, desires, and objectives people set for themselves are the direct result of different values. You'll be shocked how much easier life becomes after you create and prioritize your values list. Your values list will also enable you to choose the dreams on your dreams list that should come first. The accomplishment of those dreams and goals that are in alignment with your top 5 values will be the most satisfying and personally rewarding. That's where 80% of your available energy and time should be spent.
Strategy 1-2. Spend the majority of your time on those values which are the most important to you.
Time is always limited. You'll get the greatest sense of satisfaction when your time is spent on those objectives, projects, adventures, and relationships you value the most. Therefore, it is important to prioritize your values once you discover them. It is you and only you that can decide what's important in your life. Why spend any time doing anything else?
Strategy 1-3. Identify your current values by identifying and prioritizing your values.
Turn to your manual, and you'll find a values list, one for you or one for your spouse or mate. Go through the list once or twice, checking off those values which seem important to you. Check them off on the lines on the left-hand side of the page. Next, prioritize those values which you have checked from 1 to 10, from most important to least important. You may, of course, prioritize more than 10 values. Remember, there are no right or wrong answers. Stop the tape and create your own values list.
Strategy 1-4. Identify and eliminate destructive values from your life.
Most values are positive, but there are destructive values that always lead to personal failure and must be changed for those who want a successful, fulfilling life. Destructive values include, first of all, the desire of something for nothing. Symptoms include gambling, cheating, or stealing. Secondly, destructive values include the desire to feel superior to others, and symptoms include gossip or prejudice, bigotry, aloofness, criticism, and even blame. Thirdly, a destructive value can include the desire for continuous instant pleasure, and symptoms often include overspending, overindulgence in food, alcohol, drugs, or anything else. Identifying destructive values is the most important step in their elimination. Destructive values are parasitic and drain energy that could be spent on the things you value the most. A jockey who is overweight by only 4 pounds can lose a race, even on the best horse. Never put roadblocks in the way of success. Establish as one of your most important goals the elimination of any destructive values. In your manual, you'll find a page in which you can put together your destructive values elimination plan. The next step in creating your financial blueprint is to set your course by defining your goals. Now, goals are those specific objectives on which you have decided to invest your time, energy, and money. Whereas your values are mental attitudes, your goals are physical objectives. A goal can be accomplished in as little as an hour, like going to the grocery store in order to stock the refrigerator, or your goal may take most of a lifetime, like creating $1 million retirement plan. All goals to bring satisfaction must be in alignment with your important values. The higher the priority of one of your values, the greater the satisfaction you will derive from reaching a goal that affects that value.
Strategy 1-5. Focus on the result you want, and the opportunity, money, time, and talent you need will present themselves.
When you focus on what you need to accomplish your goal, you instantly become aware of what you lack, which can become a reason for inaction. For instance, my goal, you say to yourself, is a new $35,000 BMW convertible. The process crap. Well, since I only have $600 in the bank, I guess I'll never get there. Focusing on the result means you have a clear picture of your life with that BMW. You can see yourself driving it. You can feel it. You can almost taste it. And your attitude becomes one of, I will not be denied. That's how things get accomplished. Focusing on the result creates your roadmap. It's far more effective when using a map to locate first where you want to go. The shortest path from where you are becomes obvious. On the other hand, if you don't identify the location of your destination, but simply follow the roads, the red and green lines, it may take you 10 times as long to get to your destination. Your destination is the result you want. The roads are the processes of getting there. By forming a clear mental picture of each goal and never letting go of that picture, you will always find a way to accomplish what you want. In your manual, you will find fill-in-the-blanks charts to list each of these goals you have chosen for each category. Stop the tape here and write down your goals. It may take some time, but it will be worth it. I know you're anxious to get started with your money-saving and money-making strategies, but I'll promise you, Developing your financial blueprint first is one of the most important steps you'll ever take in your life.
Part 2, creating your records management system.
How many times have you heard yourself say, "I'm such a lousy record keeper"? When tax time comes, the record gathering process involves looking for receipts, checks, and other necessary paperwork in drawers, shoe boxes, pocketbooks, and even in your glove compartment. Poor record keeping costs you time and money. Lots of time and lots of money. Yet by creating a simple records management system, we'll call it your RMS, you can get your records under control in one evening or a Saturday morning. And then you'll spend just a minimum amount of time and effort staying organized. A good records management system will save you hours of valuable record-keeping time, assure that you get all the tax deductions you deserve, and enable you to know your financial condition at any point in time. Records management is simple. It means knowing what records you need and knowing where to find them. In this section, you will evaluate your current system and upgrade it to a true RMS.
Strategy 1-6, choose a permanent records management area.
Good record keeping requires concentration and organization. Choose a reasonably quiet area or room in your home as your records management area. You won't need much space, but you will need enough. A desk or table and your filing cabinet, and even your personal computer if you have one, belong in this area. You can find an inexpensive desk or table. Sears, for instance, has attractive desks for as little as $75, tax deductible, of course. Keep your records management area off of the kitchen or dining room tables or any other temporary workplace. Your records management system is important enough to deserve a place of its own.
Strategy 1-7, set up your filing system.
Keeping your records organized and quickly accessible means setting up a complete filing system for receipts, bills, statements, contracts, agreements, and your personal papers. The easiest and best method is to set up files for each category of important papers. Your system will contain files by type, such as doctor bills, and by company, such as First National Bank MasterCard. To create your system, first, purchase 50 regular-sized manila file folders. Second, purchase a 2-drawer filing cabinet, if you don't already have one. Third, choose the file names and categories you will use. Fourth, label each folder with its file name using a pen or magic marker. Be sure and print clearly. And fifth, file all folders alphabetically in the top drawer. Sixth, use the top drawer for this year's files or contracts and agreements still in force. Seventh, use the bottom drawer as your history file for previous year's papers, completed contracts, old tax returns, and records. Later, I'll give you a formula for how long you must legally keep your records. You can combine several years of records in each history file. For instance, all of the previous several years' credit card statements from one bank in one file, but within that file, keep your records in order by year. You will refer to your history file only occasionally, but when you need history records, you want access to them quickly and conveniently. Next, purchase a printing calculator, which will cost you just $35 to $50. You'll use your printing calculator to reconcile your bank and credit card statements and to compute your expense totals for your tax returns. Organizing and maintaining your records often seems boring and time-consuming. With your records management system, record keeping is easier, automatic, and ends frustration and financial losses caused by lost and misplaced records.
Strategy 1-8, choose the record-keeping categories for your filing system.
In your manual is a suggested checklist to help you begin your filing system. Check off those file names you will use and add other files you think you will need. The name of the file folder on the page is shown first, and the items that will probably go in your file are listed underneath.
Strategy 1-9, purchase a plastic check box for checks, deposit slips, and check registers.
Keeping your checks organized is one of the most important steps of your records management system. Don't leave canceled checks and statements in envelopes and drawers. File checks in number order in your check file, along with deposit slips, deposit receipts, and your check register. Always reconcile your bank statements as soon as you receive them. You know, there's an absolutely false belief that because banks use highly sophisticated computers that they can't make mistakes. Nothing can be further from the truth. My own bank once made a $40,000 mistake in my account, which was fortunately caught by my accounting department because of reconciliation. Reconcile each bank statement as soon as you receive it using the form printed on the back of the statement. In Strategy 1.9 in your manual, you'll find specific instructions for how to reconcile your bank account if you're having trouble. How do you know if you're in control of your checking account? Well, you know you're not in control if you ever have to call the bookkeeping department of your bank to check your balance before you write a check.
Strategy 1-10. Store important documents in a bank safety deposit box or a fireproof safe at home.
A few of your records are difficult, sometimes impossible to replace, and these records should be kept in a fireproof safety storage area. In your manual, you'll find a list of important, hard-to-replace papers that are good candidates for your safe. Check off those that apply to you and make sure they get put in the right place. Keep in your safety storage area mutual fund shares, stock or bond certificates, property deeds, automobile titles, your personal property inventory, marriage certificate, your will and estate plan, birth certificates, diplomas, your military discharge papers, passports. You can rent a safety deposit box at a bank or buy a fireproof metal safe for your home. The safety deposit box has the advantage of costing less initially and is available at most any bank for about $50 a year. The disadvantage is that you continue to pay rent every year and the bank is not as convenient as your home when you need access to your records. You can buy a heavy-duty metal combination safe at discount department stores like Service Merchandise or Luria's for as little as $125 or even a deluxe model from an office supply store for as much as $600. Make sure your safe is fire rated so your records are protected in case of fire. Most safes can and should be bolted to the floor for extra security. Your home safe is also a good place to store expensive jewelry or things you want to keep out of the way of your children.
Strategy 1-11, build a tax reference library with IRS publications and forms.
Building a tax library of IRS manuals and publications is one of the easiest yet most important steps in maximizing your tax deductions. To successfully use tax-reducing strategies, you must know both the IRS record-keeping rules and the correct tax forms on which to take your deductions. The two most important IRS publications to keep in your tax library are Publication 17, which will give you the IRS guidelines for your personal taxes, and Publication 334, which will help you with record-keeping and tax rules for your small business. Using your phone book and the instructions in your reference manual, get all of the recommended publications and put them together on a shelf in your records management area. You'll find the tax forms ordering number listed under U.S. Government Internal Revenue Service forms. Replace these publications once each year when the new ones are available, usually each December. If you prefer, you can obtain these publications in person from IRS Forms Room at the Federal Building in your area. Your mileage is deductible as a tax preparation expense on Schedule A.
Part 3, how to keep records for tax deduction.
There are a few simple record-keeping rules I want to teach you now that will ensure that you get the maximum tax deduction you deserve and that you're always in a position to prove your point in any dispute. We have compiled these record-keeping suggestions from IRS publications and even from the IRS Auditor's Manual, which gives instructions to IRS auditors for what taxpayer records can be used to substantiate deductions. Keeping the right records always keeps you prepared. Remember, when you carry an umbrella, it seldom rains. The way the tax code is written, it is your responsibility to be able to substantiate the amount and purpose of each of your tax deductions. If your record keeping is poor, you won't be in trouble with the IRS, but you may lose some of the big deductions you really deserve. That's just like burning your money. Whether you run a part-time business from your home, a full-time small business, or are a professional, or have a full-time sales job, all of these same rules apply. Let's look at your strategies.
Strategy 1-12, Keep all tax records at least 7 years.
Although the statute of limitations for an IRS audit is just 3 years, you may be required to produce supporting records that apply to previous year's tax returns, such as contracts or written agreements. Therefore, keep all of your tax records at least 7 years. Records that fall under the 7-year record-keeping rule are contracts, agreements, receipts, canceled checks, tax returns, correspondence with the IRS. When you create your 8th-year tax file, you can throw away your oldest tax file and all its contents, unless, of course, you have a sentimental attachment to it. You may wish to keep only your tax returns so you can build a history of your financial progress over your lifetime.
Strategy 1-13. Keep receipts for all deductible expenses over $25. Keep a written record of expenses under $25.
Did you know that the IRS does not require a receipt for any tax-deductible expense under $25, except for lodging? Or can you get a hotel room for under $25? All you need do is keep a record of small expenses in your expense log book.
Strategy 1-14. Keep expense records in a pocket-sized expense log.
Enter the amount and the purpose of these expenses in your book. Examples of deductible expenses under $25 which don't require receipts could be taxi fares, tips, lunch, calculator tape, books, pens, and audio or video tapes.
Strategy 1-15. Keep receipts in addition to canceled checks.
The IRS decided many years ago that your canceled checks alone are not necessarily proof of a tax-deductible expenditure. Be sure you also keep the receipt or invoice that contains the number and address of the company and the items purchased. Checks alone don't show why the expense should be deductible. You do not have to send in these receipts or checks when you file your tax return, but you may need these records someday to substantiate the deductibility of an expense.
Strategy 1-16. Use a credit or debit card for effective record keeping of deductible expenses.
Cash purchases are the most difficult deductible expenditures to keep track of. A credit or debit card produces an immediate acceptable tax record because your statement shows the date, amount, and the name of the company paid. All you need do is add a few short words describing the deductible purpose. A credit card creates a charge that is billed to you on a monthly statement. A debit card is usually a Visa card which doesn't charge anything, but does work like a check, deducting your purchases directly from your bank account. The advantage to a debit card is that it can't get you in credit trouble like a credit card can. Write on each receipt, at the point of purchase, the deductible purpose. For instance, lunch with Bob to discuss his products, or if you're buying office supplies or gasoline. Go through each credit card folder at tax time and total your deductible expenses. Categories can include automobile expenses, entertainment expenses, travel expenses, food expense, office supplies, advertising, miscellaneous purchases, product costs, salaries paid, services purchased, investment and tax advice. When you receive your statement each month, mark all tax-deductible items with T's and personal purchases with a P. For easier record keeping, get a separate credit or debit card to use just for tax-deductible expenses. You will then have your deduction records all on one statement. Credit card or debit card fees are deductible as a small business expense on Schedule C for businesses set up as a sole proprietorship or other business forms for other forms of business.
Strategy 1-17. To determine the deductible portion of your VCR, home computer, or other assets, keep a time-use record for 90 days.
Up until tax reform, record keeping for tax deductions was cumbersome and time-consuming. Congress had passed what it called the Adequate Contemporaneous Records Keeping Rules, which required documentation of every expense and every tax-deductible business mile. Evidently, congressmen found these rules too difficult to follow themselves, so record-keeping requirements were greatly simplified, particularly in the case of your assets like your car, your VCR, or your home computer, which are used part of the time for deductible business or financial planning purposes and part of the time for non-deductible personal purposes. By using your assets in a small business or for tax or investment record keeping, they do become tax deductible. If you use your VCR, home computer for instance, for both tax deductible and non-deductible purposes, you must determine the deductible use percentage in order to earn the tax deduction. The simplest method of apportioning the deductible and non-deductible use is to take a sheet of notebook paper, draw a line down the middle, and on the left-hand side write deductible use, and on the right side write non-deductible use. There are even pre-printed sheets in your reference manual which you can use. The current record-keeping rules now require you to keep records on the business and personal use of an asset for just 90 days each year. And as long as the percentage use doesn't change materially, you can use that same percentage all year long. Make an entry in one of the two columns, deductible or non-deductible, each time you use your asset, and compute the total time. Tax-deductible uses of your VCR or home computer can include investment education and record keeping, tax education, tax record keeping and tax preparation, real estate education or real estate record keeping for your real estate investments, any use of these assets in your small business, financial planning, including the use of your Charles J. Gibbons Organization videotapes. Non-deductible use includes your personal use, entertainment, or use by the kids.
Part 4, Your Wealth Checkup.
If winning isn't important, somebody once said, then why bother to keep score? Keeping score financially is done with your yearly wealth checkup. Your yearly wealth checkup identifies where all your money came from and went. Every December, most people end up repeating the pauper's prayer. I never made so much money, I never spent so much money, and Lord, where did it all go? Since there is no limit to the amount of money you can spend, the solution is taking better care of what you have. All the strategies you will learn in successive sections will help you do just that. First step is identifying where you are now, and you do that with your first wealth checkup. The second step is to do a yearly update. For better or for worse, you must know where you are financially. Only by planting your feet firmly on the ground where you are now can you generate the greatest momentum towards where you want to be next year and beyond. Your wealth checkup defines your income and income sources, which means where your money comes from. Secondly, your expenses and debt. That's where your money goes. Thirdly, your net worth and your financial condition. Not only will you use your wealth checkup to measure your financial progress, but the same information once gathered will be used when you apply for credit, mortgages, personal or small business loans, saving you countless hours of last-minute research. Your wealth checkup will require only 30 minutes to complete, and there's no time like the present to begin. All of the necessary forms are in your reference manual along with the instructions. Let's complete Section 1 by doing your wealth checkup. Then, using all the strategies in this section, you will now be armed to go forward, totally organized with your goals, values, and your strategies identified.